Good afternoon, everyone. Greetings all over the world. And today we're talking about empowering your finance and learning and growing mentally. So, which is very important because, I feel like, understanding more about empowering your finance and learning and how you can grow mentally, it's very important. I mean, everyone, um, don't forget to like and subscribe. So we are live now on Zoom meeting, connected to live. You can just watch it on YouTube. So and it's very important topics that we actually need to talk about. It's very crucial topics of financial freedom. I mean, when we talk about side hustles, I mean, now in these days where inflation is too high and the importance of unlearning, and growing mentally, I feel like it's very important, right? In the realm of this money world, Forex, we're talking about crypto. So I'm excited to actually explore this concept together. So let's dive, right into it, right? Because we really need to understand what is financial freedom. When we talk about this financial freedom, what are we actually referring to? Because I'm sure a lot of people, because we remember in our, in our society, we never been taught about financial freedom. So it's not just about accumulating wealth. It's not just about gaining control over your finance, but actually it's about taking practical strategies to achieve your financial freedom, and how it goes beyond the traditional notions, traditional norms of success, because there's still myth around what financial success should look like. So we need to unleash the power of side hustles, especially if you're looking for ways on how you can make money in this 2024. Because side hustles, if you have a bigger picture, can be anything. Side hustles are more than just means of extra income. They can be a pathway to diversify your skills. You exploit your passion doing what you love, right? You create multiple streams of revenue. And here we're exploring various side hustles and how they can contribute to the financial resilience, right? So yes, you can have a side hustle while you're doing your regular work, while doing whatever that you love to do. You see, so it can be anything. Your talent can be a side hustle. So now let's navigate the inflation. I mean, this inflation, it's a big phenomenal, right? This inflation is a financial force that it can erode the purchasing power of your money. Money lose value over time. You find that now, in the past years, you used to have like 2,000, which was good at that time, to buy that and that at home, and you're secure for your daily basis. But then now it becomes too hard for people to prioritize that same amount of money, to get one and two at their homes, because obviously money is losing value. So we'll dissect into this impacts and how we can just treat investment. We have savings, and we learn more about trading strategies to navigate, and also we can capitalize on inflation, right? We need to capitalize on inflation, because now I think like I still feel like this mental shift about unlearning and growing, it's a big thing, right? Because now at the end of the day, if we want to succeed in ever evolving landscape of money, we need to know about forex. We need to, because now it's something that you can do at your home, with your cell phone, have your Wi-Fi, connected, and you start trading, right? There are a lot of YouTube videos that you can watch on different strategies that you can capture your mind into and start learning about it, right? So cryptos, you start building your crypto portfolio. It's very important now because crypto actually, you don't lose value of money, right? There's value of money there. So one must actually embrace this continuous learning, so that your mindset as well can have various ways on how people actually make money in this era 2024, guys. So let's discuss this importance of unlearning old fashioned paradigms and adapting to change, cultivating the growth of mindset. Because now, if we implement growth strategies like ways that we can actually implement our mental growth strategies in our financial journey, from staying updated on the market trends, and then also embracing new technologies, right? So if you check the businesses currently, most of them, they're embracing innovation, they're embracing technology, because of they see it's a way, right? So let's explore avenues to foster personal and financial development. So we also as well need to navigate, the world of forex and crypto. So forex and crypto, it's one of my favorite subjects. It's one that I love and I'm very passionate about because, yes, it can be intimidating for some people, but understanding them, it's very crucial, right? You learn how to operate this markets. You learn how to be updated with this markets on day-to-day basis, right? You've got this. You'll end up having this balanced perspective, and you'll also be able to learn how to manage your risk and leverage on different opportunities, right? So I'm on Zoom now. I'm just still gonna take some few questions from different people. So so I'll be taking your questions, right, throughout the stream. So feel free to drop them in the chats, and let's make this session, very interactive and tailored to your specific, financial queries. So, and thank you for joining me today on my live stream on empowering your finance through unlearning and to change our mental growth, right? To develop ourselves, to remember that the journey to financial freedom is actually continuous progress, right? It's a process, right? So it's a day-to-day, learning. It's a part of journey. So you enjoy, you find ways on how to be creative in this journey, and by staying informed, and you stay as well updated, right? So as well, be in a position where you are able to adapt, right? With change, you are able to navigate the complexity of the financial world successfully, right? By staying tuned to your more variable insights. And don't forget to like, to share, and let's subscribe until the next, So guys, as I take a few questions, how can I start a side hustle while working a full-time job? So, first of all, I always say that it's very important that, or very essential actually, to identify your skills and passion, right? Look for opportunities that align with your interests, right? Those can be managed. So, as long as you got the one that aligns with your interests, you can always feel passionate to always continue doing it every single day. That's how you actually push something that you really love, and you even get success on it, right, till the end of it. So start small, set your realistic goals, right, and gradually scale to side hustle as it gains maybe success. So as long as you have passion in everything, you keep pushing, you always wake up with that vision. How can I take my business? What can I do today, right? So, and I hear there's another question here from Maria from Brazil. I'm concerned about the inflation affecting my savings. What can I do to protect my money? So, well, there are various ways you can engage in, you can diversify your portfolio, right? So, exploring assets like, like trading different, maybe precious metals. This past weeks have been, focused on gold, and you can trade even stocks. You can diversify into crypto. So find assets that you do actually love, you do understand that technology, what they're behind, and you also follow the developments behind, because now it's very important that each and every project that you engage in, you know what new are they doing, and how are they growing, especially in the long term, because sustainability is the best, right? So do regularly review and also adjust your portfolio, because sometimes you find that maybe fundamentally we are looking at something that can affect our portfolio. Then you can actually reduce some, let's say maybe 60% of your portfolio, let it to be on a safe side, right? You can hold maybe your stable coins there for now until the market, that has been stabilized. But the most important thing, don't lose your position, because once you lose your position in crypto or whether in forex, right, you can never actually benefit anymore until you get another position as well that will actually leverage as you go. So the best way is actually to understand, okay, market doesn't move in straight line. It goes up and down, right? So through the ups and downs, learn how to navigate the risk and know how you can save some of the profits, allow the market to correct, and then until you can come back stronger, right? Because of remember, as the market goes down, it's a precious thing for us because of now we see it as a discount, right? So remember the premium discount. So when you get it cheaper, I mean, you can just buy and stake more of it, right? And then let it run. So Ravi says, Ravi from India, how do I develop growth mindset when it comes to managing my finances? So, well, Ravi, what I can say is that you need to cultivate growth mindset involving embracing challenges, learning from failures, right? Because most of the time we don't want to go through failures. We just want to we want it to be all smooth, all fancy, all good, right? And without any failures, without us going through, you know, uh, challenges at the time. And remember, they are just part of the process, right? Experience teach you one of the most important thing, right? So, because now when you have went through a failure, you know what not to do when it comes to the next. Now you are more aware, you are more conscious, right? You can then now be able to solve any situation accordingly, because you have experience, right? You went through it first, which is a good thing. Now, a lot of people, they don't want to go through that. So, if you view your financial setbacks as opportunities to learn and as well, to improve yourself, you see, so you will seek new information. You'll be open to actually adapt to your financial strategies based on the evolving circumstances, right? I always say that circumstances don't matter. Only state of being matters, right? Doesn't matter actually what are you actually going through, or your circumstances, your challenges doesn't actually matter, but your state of being, you how you view that situation. It's what's very important, because sometimes instead of viewing the situation in a positive way, then we turn out to view it in a negative way. And what does it bring us? Just negative consequences, right? Negative results, because we took our energy to build on into that negative ball. We took action, to support those negative thoughts. And what happens then? So just the result of you being in a limbo, you going through the circle and circle without break of any patterns. So it starts first by changing how you think and how you see things, right? And then, because now I always say, every challenges, you can draw positive meaning out of it. You can draw out the positive, something that you can build out positively, and it can bring you positive results, right? Just how you think about that circumstances, it's what matters, your being, So, and then question 4, we've got Sophie from Australia. With the rise of cryptocurrency, how can I safely start investing in them? So, first of all, with crypto, I won't lie to you. You need to educate yourself. You need to educate yourself about different cryptocurrencies, because if you follow the hype, where someone just say buy, 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 you end up blaming them. Why did they buy? At this point, because now that it just messed up my whole portfolio. You see, so you need to follow projects. You need to maybe even join them on Twitter. Most of cryptocurrencies are available on Twitter. They do have their Telegram forums. They do have their Discord. Only invest in what you can afford to lose, and consider using reportable exchanges. Like if you want links on any reputable exchanges that actually I'm currently building my portfolio on, I'll drop the link on the chat. You can even inbox me. You can drop the comments, and then we'll actually sort you out. So diversify your crypto portfolio, stay updated on the market trends, follow the projects, understand what they're all about. Have a project that you trust and you believe in it so much. Because remember, um, all these projects in cryptocurrency is just an idea, right? Someone coming up with an idea saying we are actually solving this particular problem, right? Because every cryptocurrency actually is solving a particular problem, right? Some maybe they say, okay, the charges for Ethereum are too much, then they did this cryptocurrency for lesser fees, right? And some they'll say, okay, this cryptocurrency actually takes longer for you to receive your money because of the more transactions being on the blockchains, and time being a lot of time for it to confirm all the verifications, right? And then you find that there's a project that is actually solving that particular problem, right? So there's just a lot. And funny thing, I was just on CoinMarketCap checking all different cryptocurrencies. Crazy now, just last year, was it last year or 2022, where there were only just 16,000 cryptocurrency on the coin market cap registered on the blockchain. But now it's crazy, over hundred thousands of cryptocurrency actually now registered on the blockchain. So it's a day-to-day thing. Some people actually design cryptocurrency daily, just so that maybe the bots on the network can just safely do the trade, or there and now when they see a new cryptocurrency coming in. So there's just many way to it, depending on the level of your understanding, right? So some, they'll just buy crypto in the spot, just hold it, right? And then some, they believe it, if they trade it via the the ETF, sorry. So which is highly risk, right? So then they make 10 times, 100 times, 300 times, 400 times, depending on how much risk they're willing to take and how further they're willing to leverage, So, and of course, it also, comes with risk, because you must actually, if you're chasing 400%, then as well, you must be willing to lose that 400%, So, but then, that is as well for full margin traders who are actually interested in cryptocurrency, leveraging in the high risk cryptocurrency trading. So it depends which one you actually prefer. So question number 5 from Mohammed from UAE. What's the best way to navigate the foreign exchange market for beginners? Well, Mohammed, what I can say is that begin by understanding the basics of forex trading, right? Practice. It can be maybe on a demo account, but I always say demo account actually waste time, because there are no particular emotions that are involved in trading, right? You're just placing a trade. Oh, I don't care. I'll just check it a few minutes later. But then, is there true intention to true trading? No, right? So, but then if you take it to a real account, right? Even if maybe you open a cent account and then put real money there, right? Get into real markets, understand the real emotions that are there, and as well get yourself involved. So, but always, yes, as women, as humans, right? We cannot take emotions out of ourselves, right? So we're emotional beings by nature. But the best way we can actually learn is to what? Learn that how can we understand our emotions? How can we, not dwell too much on emotions, so we can have better clarity in trading, have the best directions based on, our understanding. Develop a solid trading plan. So in the end of this, I'm going to show you how you actually create your trading plan. So I'm going to as well show you how you use risk management, strategies, because they are as well the best. If you go to MT5 now, MetaTrader 5, you just maybe check your buy limits or sell stop by, check, you drag it to check how much does it cost for this trade if it goes against me, that actually help you redefine your risk versus your reward ratio, because now you'll understand, okay, this is how much I'm willing to lose. I can only allow the market to come as much as this level, right? And then once it comes to that level, If it hits me out, then I'll look for another opportunity, right? But then if it continues into my direction, then you move the stop loss to your entry level. So yeah, now you're in break even, right? So that's just another way how you can actually um, get yourself involved in foreign exchange by managing your risk, continuous educating yourself, and as well stay awoke to the economic indicators, right? The global events that can impact your currency markets. So each and every day morning, I go to investing.com. So investing.com, so you can just check, the global events that are taking place Monday to Friday that can actually impact your thing. So you can even trade accordingly, So if okay, you're trading, you've got dollar news, and the dollar is going to be positive, so you can then leverage, accordingly. So feel free, guys, to ask me questions, and let me hear your thoughts. So I've got Lena here from Germany. I've heard about fire, which is, I'm not sure what is that meaning. So okay, he says financial independence, retire early. How is it realistic, and where should I start? Right. So Lena, fire. Okay. Well, you say fire, right? Okay. I'll just abbreviate that way. Fire. So it's achievable, right? With careful planning and disciplined savings, right? You being able to apply your risk management all the time and diversifying your portfolio, knowing that, okay, now I'm expecting the dollar to actually fall. Now I'm expecting the dollar to actually rise. Then, you are able to be flexible around, and then find cryptos, find currencies that, can align to that fundamentals. And that's how you're going to as well, start creating a budget, right? Reducing unnecessary expenses, and you're maximizing your savings, right? Invest wisely to accelerate your path to financial independence. So, but realistically, I always say, if you set your goals and your timetable, right, and then, or your timeline, let me say your timeline, right, and then your trading plan as well. If you're into forex trading, I always say trading plan is always important because it brings that discipline out of you, right? It shows you, if let's say, mentally, psychologically, what level are you, right? Do you still trade out of greedy? Do you still revenge trade? Do you still maybe trade out of hope, holding a trade, thinking that, oh my God, one day it will go into a profit, right? And that trade, you know, one thing it never actually goes into the profit. So now you're holding into a bigger loss, hoping that it will eventually turn into profits. So it doesn't work out, right? So those emotions are the build up to psychological issues into forex trading. So let me show you how you can actually start drawing up your trading plan. So first of all, you need to understand that there's what we call the bias, all right? The bias in the market, right? The directional analysis, right? So you actually determining the overall market biases by analyzing trends, right? Support your resistance levels. Doesn't matter what actually are using, whether it's key technical indicators. You assess whether the market is actually on the uptrend or the downtrend or ranging, right? If you're an ICT student, then you identify your buy side liquidity grabs, your sell side liquidity grabs, right? And knowing that, okay, now you have actually identified both sides, so you draw on liquidity. You see, you identify liquidity zones where the actually significant buying or selling interests are likely to occur, right? So then once you analyze, you wait, right? So this involves you just marking the areas of high trading volumes, your resistance levels, your support levels, your buy side levels, your sell side liquidity, grabs. So identifying, marking them all up, knowing that there's a high trading volume here, right? There's a significant, maybe historical price levels where the price actually started, just ranging there, for many times now, not breaking the levels, you see. So the narrative, what is the narrative? Because I always say as well, Develop a narrative for your trade based on the fundamental and the microeconomics factors. You see, so sentimentally, what are the crowd saying? Understand the broader context influencing the currency pairs movements, such as economic indicators, right? Your central bank's policies. If you're trading stocks, there are always company earnings release reports. So you follow such things, right? Your political events that can actually happen. So, and now once you analyze that as well, you have to look at the boundaries, right? Setting limits. They will help you a lot. If you define a boundary for a trade, right, you indicate maybe some specific entry and then some specific exit points as well, right? So what do you do? Obviously, to establish a clear risk and reward ratio that aligns with your overall, trading strategies, your potential profitability, right? Yes, trading is about a game of probabilities, right? You can actually never be sure what actually the market will take. You can only pay the price to find out what will the market, if you were wrong or right about what you were thinking, if it will buy or sell, right? If you are saying it buy, you're actually paying the price to find out if you were right, if it will buy. And if you were right, then you get, some profits on that, right? So, but yes, of course, technical analysis helps us, to draw out and see what the direction of the market or the price would go to. And, there are people who only trade fundamentals. Or professional traders who only trade fundamentals. So if they know, US dollar is gonna be weaker, they'll focus on the pairs, paired to the dollars, and then they start, capitalizing on that, leveraging on that, right? So because they see an opportunity, you see. So if they know, okay, today we've got the earnings, and then we do not expect a good report from many companies, maybe 70% of the technical companies in the US, then they know they'll, okay, start selling the Nasdaq, right? So if maybe it's under industrial and they're looking at maybe what could be the earnings for all those Tesla's companies, 70% of those 30 companies in the industrial, you see, they start capitalizing on that. So now I always say as well, once you identify the whole pattern, right, have your target, profit objectives, have your target, right? Set a profit targets, based maybe on your technical analysis, your key resistance, your support levels, and maybe establish a clear risk reward ratio in that, right? So maybe in other relevant factors, I can see that yes, realistic expectations, right, for you as a trader, as a potential, what profit do you actually feel like making, right? So write your target there, and then now after writing your target, then you have to jump into finding your entry levels, right? So once you identify reliable entry patterns or signals, let's say maybe that aligns with your directional bias, right, then you're good to go. So if you say, okay, I am going to buy based on this fair value gap that I see here, I'm going to buy based on this volume imbalance that I see here, or maybe you're going to buy after distribution, whatever that actually you see there, as long as you identify, your levels based on what you see, and then make sure that your entry levels is actually confirmed, right, by your view of the market direction, your technical indicators. Be I mean, get confirmation at all time before you can actually jump into a trade, right? And understand your risk management, because most of the time, most beginners, like, they don't understand that risk management plays a major role. Because if, let's say, now you're going to just get in because of you following someone's signal, you don't know how they're going to manage that trade, right? Because at the end of the day, everyone has their own trade management, you see. So where are you going to end up, right? So here we're talking about money, so every cent counts, right? uh, you know Warren Buffett once said, do not lose money. This is the one of the laws, right? Don't lose it. So risk management, I always say, for example, if, let's say, you're risking 1% of trading capital, right? at least your reward should be 2:1 reward ratio, right? You must be actually be willing to double that, right? Because now, what is your contiguous plan? What is your your overall plan? Because some people will just anticipate and plan for potential market scenarios, but then now at the end of the day, they may end up failing to actually invalidate those initial analysis. You see, so if they say, okay, I'm buying here on these ranges, but then now they were just looking at the short time frame, right? So the high time frame always, remember, short time frame always follow the high time frame, right? So now you're looking at the high time frame, you go to shorter time frame, look for your entries, your your levels of where you're going to add, right? And then you follow the price movements, right? Without any expectation. Now you have put your stop loss. That's the money that you're willing to lose. Now you're free, right? Psychologically, you don't have anything that is affecting you because you are actually in a risk um, in a risk reward ratio trade that you know that you're willing to risk only 1% to make at least times two of that. Then you trade with a free mind without any psychological issue, you see, without any emotions attached to any trade, without you expecting anything from a trade, right? You just letting the trade run based on your analysis, and then just like that follow your time frame. Because time frame as well, remember, they identify what type of trader are you. We do have scalpers, remember, we've got swing traders, we've got day traders. So all of those people trade based on what time frame they are trading on, right? Whether it could be a day trade, you follow your candlestick based on your strategy. Your swing trade, some people trading monthly candles like week one, daily one. I trade day one, right? So day one, then I know, okay, if my candlestick, let's say if the candlestick closed as a red, right? All candlestick, remember, they've got the opening and the closing, right? So on my opening of the candle, I put let's say maybe a horizontal line here, and then on the closing of my candle as well, I do the same, right? Why? Because usually, if the on the daily time frame, if the market close like that, during the day, what they will do is that they will start going up, right? To the first opening of that candle and even break it out, right? Creating the new, the new day, or the new breaker from that levels, and then taking the volume or the liquidity down with them, right? And so already I know, okay, by then I've actually set my sell limits. So I understand the candlesticks, how the time as well is important in each and every opening and the closing, right? Same thing applies to both those who trade in monthly candles. So it's the same thing, because if you check now on stocks, around let's say June, July, August, market actually was actually dropping on stocks, right? But then if you check the volume that came in from uh, people who positioned themselves for buyers from, let's say, maybe October, November, December, market was just flying up, right? You check the weeks where the market was not even correcting, was just jumping up high. You see, so those were good time on stocks as well. So as well, we saw with the PPIs, the previous PPIs now, they came out positive, right? And we saw the stocks starting to drop immediately, right? Because obviously, you just trade in line with what the fundamental sentiment is going. So now, immediately after they took the volume down, the buyers start getting in, right? Because of they know the levels, let's say their mitigation levels, maybe their order block levels. They start positioning themselves for more buyers, and 2 hours later, the market already bought, right? So you missed out on maybe 2,000 rents per trade if you're using maybe local brokers with standards. You see, so that's the calculation. You're just calculating your risk versus your reward. So imagine if you have 10 trades, that's 10,000. So depends, but that is on as well on a 0.01 lot size, which is the minimum lot size, without you just leveraging too high with the bigger lot sizes. You see, so review and learn. After the trade maybe concludes, now you have to conduct thoroughly review, right? So if there is any trade that you lost, understand what was the cause of the loss. What are you actually learning from that loss, right? How can you improve that trade? Because every trade, it's a learning to you. You have to learn why, because psychologically, yes, you find that you made some mistakes. So now those mistakes, you need to know what are those mistakes that I'm making. Write them down so you can avoid them next time. You understand that, okay, I do have this problem of when I maybe got into a trade. I'm now in deeper profit. Instead of me taking partial on my trades, or taking some profits on my trades, I leave it to run and even longer. So what's the cost of that? Start, okay, I'm greedy, maybe I'm greedy. I'm always thinking I can actually go after all these volumes in the market that is coming. I can just capitalize on every volume that is coming in the market, because yes, where there's liquidity we see opportunities. Where there's risk we see opportunities, right? So you must understand, where there's too much liquidity, or you see those spikes in the market with the candles, they always run to it and create a new breakout. So if you trade that as well, take the some of the profit instead of you holding on. Sometimes you find that you're making mistake of entering a trade, and then as it goes down, you're trailing with the stop loss, you're moving the stop loss. Now that loss gets bigger, it gets bigger and bigger and bigger. You're hoping, okay, let me hold on. I don't want to lose maybe 50% of this money. Why can't you just hedge on that trade? Save yourself some money, So, because if you're buying, then you can just sell. And then now the trades are hedged, that balance. There's no volume that is coming in. You've saved your trade. Then you can look for another opportunity. And now you didn't even lose your position of a buyer, if that is what you were trying for. So now that sell, as it continues going down, it's getting more into profit, because now if, let's say, the market is not ready, then that seller is going to make money. So at some point, the market is going to reject those sellers, right? And then start going up. So what do? You start staking profits on their sellers. You close those sellers. You let the market continue going up with you. Simple as that. Now you've got two buyers. Because now, as well of that, you'll be aware of the volume that is coming in as a buyer, and you position yourself for a buyer. And then now you've got two positions that you're leveraging on. So what does that make you? Just have to be smart. So there's no need to hold on to emotions, and Forex is about be able to be flexible and then think in both probabilities, right? Well, if the market goes this way, what am I gonna do? Right? If the market goes this way, what am I gonna do? So even when you make profits, yes, sometimes you get too overexcited. Yes, yes, yes. And what comes? Ego, right? That ego that whispers into your ear saying, now you're the guru, you can make a lot of money, come again, right? And then you go in again, and what happens? So you lose it all. So how can we avoid such mistakes? Is just to be aware, be woke, and understand, that yes, as much as we love trading, it's about be aware of the risk management, right? Even though the market is about be, 50% right or wrong, or probability, if I might say, being the paradox, right? Do not be affected by both the direction, but then be able to think, okay, how can I expand more if the market is telling me this way? How can I leverage more if the market is telling me this way? Simple as that. So, I was just taking some few questions and see how many of you have some few questions. So just checking, just checking. Okay, I see few people asking. I've learned about risk management. Thank you so much. Now I understand. So even when you're a full margin trader, right, you still have a risk management. Maybe you're saying I want to fund 1,000, and once I make money on the 1,000, then I take some of the profit and I go in with another 1,000. So it can depend on how you actually operate around that. So it's all for your best interest and how you do it. So yep. So let's see some questions. So far, all I get is acknowledgements. People saying thank you so much. I've learned a lot from this course, and keep it up. So yeah, let's keep pushing. Let's keep pushing. So yeah. So far, if I have no questions, I'm just going to end this. This was a lovely 45 minutes with you guys. So thank you so much, and see you next time.